Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome back. You're watching Traders Corner, and as always, I'm joined by Garth McKenzie, who is the founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, before we start talking about some of the themes this week, what did you make of yesterday's moves on the market? Because they seem to be pretty wild.
Yeah, they certainly were pretty wild. I mean, some of those moves in the resources sector and in the gold sector specifically were pretty wild. But what you've got to remember is that we were coming back from a public holiday. So the gold shares were up in New York on Thursday night and again in New York on Friday night. And we actually had to catch up both of those two trading sessions in order to get to back to parity on our market. So, you kind of had two trading sessions rolled into one yesterday, which did result in some very, very aggressive moves to the upside on some of those stocks. To me, it did kind of look a bit like short covering in many respects, but it'll remain to be seen now whether the stocks can maintain those levels that they rallied to yesterday, because if they can, then maybe we've got better times to come.
Yeah, maybe we've hit a bottom of some.
Yeah, maybe. And I mean, interestingly, on the gold shares, I saw HSBC have now finally put out a sell recommendation. And if ever there was a buy recommendation or a reason to buy, that's probably it, because these
guys are so far behind the curve,
unbelievably far behind the curve, as always, and they've had buy recommendations on these gold miners for a long time. And now suddenly, when they've been thrashed, now they're putting out a sell recommendation. I mean, it's just, it makes me shake my head. So, the contrarian in me says maybe if that's the if that's the case, maybe it is actually time to be a little bit contrarian and maybe put my neck out and say perhaps the worst is behind us for the gold shares now.
Can't see you being HSBC's best friend today, Garth. But shall we start off talking about the bigger picture? Where are we actually at, having had the market moves we've enjoyed over the last couple of days?
Yeah, well, what I'm looking at today is, first of all, we're going to start looking at the bigger picture, and we're going to look at the S&P 500 and at the top 40 index, and then we'll look at a couple of our open trades. So in terms of this bigger picture, let's have a quick look at the S&P 500, which is on the screen at the moment. Now, you can see a nice steady rising trend there. But what's interesting, and what I've seen being pointed out by a few analysts recently, is this channel that we've been trading in since around about April of this year. And you can see those parallel lines that tie in together quite nicely. We've been down to the bottom, back to the top, down to the bottom, and now we've been bumping up along the top of this channel again. And what we've also got over here is it's a bit of a messy structure, but you could argue that's a little bit of a crude head and shoulders pattern forming there, maybe. The neckline is that white line over there, and it comes in at 1687 on the S&P 500. And what we'd need to watch for is if we start to break underneath the neckline of that pattern, then possibly it might signal that we could go a bit lower. And I suppose if we were to see a deep correction, you could see the market pulling back to the bottom of this channel, which is at about 1590. Also interesting here is this big negative divergence that we've got on the stochastic oscillator over here.
So if you had to explain that, I mean, you have spoken about it before, but if someone doesn't know what that is?
Yeah, well, what this is really, your stochastic oscillator is a momentum indicator. And in this case, you've got a situation here where the market's made a higher high, but yet your oscillator's made a lower high. And in other words, the oscillator is not confirming the new high in the market. And what that sometimes tells you is that the momentum of this upward move is beginning to wane.
Flag,
yeah. And you might find that quite often this type of negative divergence is a little bit of a window into the future, and it can be a little bit of a precursor or pre-warning of a change in short-term trend. So if that's the case, given that we're bumping up against the top of this channel, given that we've got negative divergence, we've got potentially a funny looking head and shoulders pattern forming over there. I think I'll be a bit cautious here at the moment. And then, from a fundamental perspective as well, what have we got? Well, we've got US second quarter earnings season coming to an end now. About 90% of the S&P 500 companies have already reported earnings. So that whole earnings season is now winding down. And then in September, we've got the Fed meeting where everybody's expecting the Fed to start tapering off on quantitative easing. And obviously that has been priced into the market to some extent.
Do you think it has been priced in?
Well, look, it's not going to come as a surprise when they announce that they're going to be tapering off something in September.
If they announce
they do, exactly. They might not. There's no certainty about this. It's all speculation at the moment. But the fact is that it's certainly not going to come as a major surprise. But given that there's no doubt that there has been a lot of additional liquidity pumped into financial markets over the last couple of years with the US quantitative easing. And if you do start to pull back on that liquidity, it does open the possibility that maybe the market has a little bit of a correction. So I'm not turning bearish by any stretch, but I'm very cautious at these levels. I think we're at quite lofty levels here, and there's a technical picture that concerns me slightly, and then also the fundamental story sort of talks to it as well. So on the basis of that, it does make me want to be a little bit cautious in the near term.
I mean, I hate pinning you to a number, but if you had a bit of a correction, would you say it's not going to be a significant correction, maybe more possibly in the region of a 5% or thereabouts, people banking profits and maybe just waiting to see how things unfold, as you say, from September with the Fed's meetings?
Yeah. Look, to give you an idea, if we went back to the bottom of this trading channel over here at 1590, from the current high to that low at 1590 would only be 7%.
Okay.
So it's not a massive correction. It's not. It's not something to be worried about. That probably would be quite a nice, healthy correction. Also remember that from a valuation perspective, the US markets they're not expensive. They're not cheap either, but they're not outrageously expensive either. So a 7% correction would probably be quite healthy in this market. It'd allow a bit of the froth to come out, and maybe then we can look at it again.
Garth, what does the top 40 of our index look like in comparison to the S&P? Is it quite similar or quite different, actually?
Yeah, actually there's a similarity happening at the moment. If you have a look here, there's our top 40 index, and again you can see the two parallel lines illustrating a trading channel over there. Also started in around about April of this year, and we've been down the bottom, up to the top, back to the bottom, and now we're kind of heading up towards the top of that trading channel again over there. That level comes in at about 38,400, and maybe you could stretch that a bit to around 38,500. But we're getting very close to that area of resistance now. And also, if you have a look at our stochastic at the top here, it's very overbought. You could argue a slight little bit of negative divergence is evident there as well. It's certainly not as clear as it was on the S&P 500. But for me right now, chasing long positions at this lofty level seems a little bit like maybe picking up pennies in front of the steamroller.
And you don't want to do that.
No, you don't.
Garth, so this is sort of the bigger picture, and you're not putting on any trades this week, so you're just a little bit uncertain with what the markets are doing.
Well, yeah, that's it. I think at this point, the question is, if I'm worried, would I go short at these levels? Not this week. Let's see. I'm generally not a big believer in trading against the momentum. Regular viewers will remember that we actually did go short on this top 40 about 2 weeks ago, and we came out with a bloody nose. So I'm wary of doing that again. But let's see. Let's take each week as it comes, and let's have a look what happens at that resistance area. If it really does show evidence of reversing down off that resistance, maybe it warrants a short position, but we'll see.
Okay, well then let's have a look at some of the open trades that you've got with the portfolio, and the pairs trade. Is that starting to, I don't know, hit a bit of a wall? Yeah,
it's being a bit lethargic for us. I mean, it is working, but it's working very, very slowly. And it's one of these trades that you sort of think, oh, come on, either work or let's take it off. So I'll show you what we've got here. This chart that's up on the screen now is a relative chart of Vodacom versus MTN. Basically, to get this chart, you divide the price of Vodacom by MTN. So you get that chart, which is the relative chart. And what we had over there was a very steady downtrend resistance line. And when we got to this area of resistance here, I decided to enter this pairs trade. And what we did in order to effect that pairs trade was we went short of Vodacom at 113 Rand 25, and we bought MTN at 175 Rand 30. And that meant that the ratio was 0.6463. Now the resistance area at that stage was about 0.65. So you can see we hit it pretty much on target in terms of where the resistance was. My stop loss is at 0.68, which basically implies that the market would have to go above that prior high point over there. And my target for this is 0.59 on the ratio, which is about down here somewhere. So at the moment we're around about halfway towards our target level, and it seems to be stalling a little bit. Currently, you can see Vodacom's share price is around about today. It was 120 Rand and 68 cents. MTN 194 Rand 30. So what that means is that the ratio is now 0.62. Okay. All right. So we're on the right side of this trade. We are making money on it. It hasn't met our target yet, but it is making money. So I'm going to keep an eye on it for the rest of the week. Look, it's one of these trades I'm not keen to keep it open forever. If it works, quite quickly, great, I'll take the profit. But if it's going to continue to be lethargic, I might just bank it and then look elsewhere for something else interesting to do.
Okay. And what about Grindrod, especially in expectation of the results coming out, in a couple of weeks' time?
Yeah.
It was a trade that's worked out very nicely from the beginning, but is it sort of consolidating now?
It's still working out quite nicely. It's been quite lethargic over the last 2 or 3 weeks, really. But let's have a look at it. What I'd identified on Grindrod over here at the time was that we had an ascending triangle. That's where you see the series of flat tops over there combined with a rising lower trend line. And ultimately, you would back the stock eventually to break out the top of that pattern, which is exactly what it did. So you typically take the height of these patterns and at the broadest point, and then you project it up by that height to give you your target. So my target here is 24.50 Rand. We bought for our portfolio, we bought 4,300 CFDs at a price of 21 Rand with a stop loss at 19.50. Now it's working out quite nicely, but what you can see is that the stock has been trending along sideways over the last 2 or 3 weeks. Now, if I extend that uptrend out to the right, you can see that the stock is still very much well within that uptrend. It could probably go sideways a little bit more before it met this uptrend. What we've got over there now is this this sideways pattern.
Just needs a bit of a kicker, doesn't it?
It needs a kicker and it needs a catalyst. And the thing is that the results are due to come out on the 2nd of September, which is about 3 weeks' time from now. So that could very well be the kicker that we're looking for. What also encourages me here is if you look at the stochastic, it's actually starting to work off this overbought condition, which is quite a nice situation to be in. When the stock goes sideways and your stochastic starts to move more and more into oversold territory, it's quite a nice setup there. So all in all, I'm quite happy and quite comfortable to hold this trade. And I think that any strength that we see leading up to the results or on the back of those results, I will use that strength to probably sell into.
Because the analogy you drew last week was between this trade and Sasol. And Sasol, you said at the time the market had, I suppose, underrated or the tradings update came in ahead of expectations, yes. And the market had clearly got it wrong, and then the shares bounced, and obviously it's re-rated subsequently to that.
Yeah.
Grindrod might be the same thing. I know a lot of people still think of Grindrod as a purely shipping business, but it's not. It's logistics, it's ports, and it's also got, I suppose, a rand hedge component. So
very much so, yeah, very much a rand hedge component, and that's what kind of gets me excited about it, the fact that the rand has been quite weak this year. Also, just in terms of earnings, if you look at the consensus data on iNet, they're expecting Grindrod's earnings to be flat for this year. Now, I can't see that. I really can't. In a weakening rand environment, I can't see that Grindrod's earnings are going to be flat. So I think that the expectations are too light, and that we probably will get a bit of a surprise when their results come out. The thing is, the company hasn't issued a trading update yet, and usually if you go back in prior years, they usually would have issued a trading update by now. So that makes me think that earnings are not going to be greater than 20%, but they're not going to be naught either. So I would, if I'm a betting man, which I am, I would say that you're likely to find that the results will come in closer to plus 20% than to 0% growth. And that, for me, is where the potential surprise comes in.
Let's hope so, because I'm a long-term holder of Grindrod. Garth, so what does the portfolio look like? Imagine hardly changed from last week then.
Yeah, very, very similar to last week. So there you can see all of our open trades at the moment. The ones that are still open are Grindrod, where we're up 8,000 Rand. And then our pairs trade is up a net 6,800 Rand for us at the moment. So the portfolio is sitting just above 353,000 Rand. That's up 41% for the year to date.
Okay. So to end off with, a reminder of upcoming courses?
Yeah, so I've got a high probability trading course coming up this Saturday, the 17th of August. And then I've set another date for the 5th of September for an Understanding CFDs course. And these Understanding CFDs courses have been going quite well. I'm trying to run them on the first Thursday of every month.
Okay.
So there's another one of those coming up. If anybody's interested in attending either of these courses, get in touch with me, email me, garth@traderscorner.co.za, or you can get me on Twitter or on Facebook.
And lastly, a plug for the Traders Corner website.
Yes, well, there it is. So, if you go to traderscorner.co.za, not only do you get to see a picture of me, but you can also sign up for a free 7-day trial. There it is in the middle of the page over there. You can go on and have a look. We publish a market daily game plan for the market every day. We publish weekly analysis where we look at the technical structures of a variety of stocks on the market. There's earnings consensus data there. There's an economic data calendar. There's a whole variety of other things. you can go and try it out for a week, and if you like it, then you can start paying for it, 279 Rand a month.
Okay, cool, Garth. We'll leave it there. Thanks as always for joining us.
Thanks.
See you next week. That's Garth McKenzie, founder and editor of Traders Corner.
Traders Corner is proudly brought to you by IG, the specialists in CFD trading.